Hello, my name's Craig Earlham, Senior Market Analyst at Awanda. Today we're going to talk about the dollar versus the Canadian dollar. After a long time in which we've seen this pair trading in a long-term uptrend, we're talking about a trend here that's lasted nearly 2 years. It looks as though we may have finally seen a breakout here, which could make things very interesting for this chart. Now, we have to remember that we have seen these levels tested on a number of occasions to the downside, but that slow grind high just continued to occur. The support for the dollar just wouldn't cede, and there's potential that now that we are seeing that unfold. Now, we broke below that rising trend line, which I think is really significant. I think we do need to see further confirmation, of course, because this is a long-term channel, and therefore we have had periods during that where we have had small little breakouts. They just haven't held. So I'd like to see some confirmation, whether it be a weekly close or another level broken before we start to see some confirmation of this. But the early signs are certainly encouraging. Now, we broke down to around these 132.50 levels. We've rebounded higher off that 200-day moving average, and now we're testing 133 from below. Now, at the first test, this is holding. If we do push above here, I don't think there's anything to be concerned about. I think 134 again offers another interesting test, with that having been a support for a number of days, if not a few weeks, prior to this break lower. I think primarily speaking, we're looking at this chart, and there have been a number of bearish breakouts, which suggests that 200-day moving average could come under a lot of pressure again. And if we break through that 132.50, 132 level, then there's potential that this could really pick up some steam. Now, in terms of what's driving this, I think there are a number of factors really at play here. The primary one has to be what's happening in the US right now. The fact that the Fed is having to step up its dovishness in order to appease markets. We have to remember at the start of last week, markets were very much in concern territory. Traders were worried about the inverted yield curve and the scale at which it had become inverted, the recession warnings that therefore may hold, asking whether the Fed would actually step up and cut interest rates. Well, since then, a lot has changed. We've had a few policymakers who have come out with very dovish messages. Of course, that includes the more dovish members like James Bullard, but even Jerome Powell, the Fed chair, certainly left the door wide open to an interest rate cut. And what that has done is it's created a scenario whereby now one rate hike in July is all but priced in. 2 rate hikes by the end of the year is all but priced in, and even 3 rate hikes by December is around 50-50, so it's still a coin toss at this stage. That's a dramatic shift from where we were at the start of this year, and it's this dovishness which has firstly supported the equity markets and meant that we've had that rally since the start of last week, unwinding much of those losses. But the impact that that's had on the dollar, that has therefore been negative, which is typically what we will see in these scenarios. So the weaker dollar is what's really driven this potential breakout, or at least this initial breakout in the dollar-Canadian dollar pair, but could potentially feed into further declines as well if either 133 or even 134 holds. Of course, a hold of 133 means the rising trend line holding as well. So from a technical standpoint, that would potentially be more significant. Another thing that could potentially support the breakout here could be movements in oil. Now, we've seen oil breaking lower, which is typically negative for the Canadian dollar, although you wouldn't necessarily see that in this chart because of the moves in the greenback. But if we do see oil rebound off these levels, which it's around $50 in WTI crude, that could be additionally supportive for the Canadian dollar, which could potentially even further weigh on this currency pair and help be another catalyst for a break below these kind of 132 levels, which again could help this to pick up some steam.